Oh, I found it. Yeah, let's go.
Number.
I think I didn't say record. Um, obviously, you guys know that we're working based on the strategy. I sent you guys the PDFs. Yeah, but nigga, I didn't. Our premium contact. Yeah, you guys know that we're working based on this strategy, this PDF, the Falcon FX strategy. Ne. So within that strategy, we utilize um, patterns that repeat themselves all over again. Again. Still, ke thoma ka question tsa gago or ke bue ko tsona? Tla di bona ko gare. Still. Okay. So within the strategy, guys, we like to start off on the daily chart. Ne? So basically on the daily, we're trying to um, identify areas of significance. Ne? Immediately you can see that this was an area of significance where the market reversed. Ne? The market the market reversed in this area. It has reversed in the past, reversed, reversed, reversed. But now we're not trading support and resistance. We're not trading um, this what your typical amateur does. When the market comes, it buys. When it comes, they sell, buy, sell. We're not trading this. No. So that's why on the daily, we just try to identify these areas of significance. Only that, and then keep our chart clean. No. So, Stido, I'm answering your question. Which time frame is the best for analyzing? All these time frames are exactly the same. From the daily to the 1 minute, exactly the same. Um, how to explain this? If this candle on the daily is going down, on the 4 hour is going down, on the 30 minutes is going down, on the um 15 minutes they're all going down. They're all exactly the same. Ne? They're all exactly the same. So all time frames are just as important. Ne? Just as important. So when analyzing your typical currency pairs, we start off on the daily um, and identify these areas of significance. And another thing which is important within the strategy is simplicity. I did notice that this zone here comes up to here, but I will not extend it. Why? Because I'm trying to keep my chart as simple as possible. The more simple your chart is, the more you can understand it. It's pointless to have all these indicators, all these things, all this Fibonacci on your chart if you're not gonna understand them. The aim is to understand what is going on. Okay, so the second area of significance, I will mark this area. This area. For simplicity, I will mark it in the form of a line and not necessarily a zone. Okay. And then as I go deeper in the lower time frames, oh yeah, something I forgot to mention. On the daily, it is also important to identify direction of the market, the long-term direction. Um, it is important to know when the market is going. The swingers look at the daily most of the time. So I can immediately see that the market um, made a push to the downside. From here, at the area of significance, it reversed. So I can see that now we are in an uptrend. So in this market, we are looking for buys. To answer your question again, Steve, which is best for profits, scalp trading or swing trading? So the difference between the two, swing trading is basically um, trading on your daily chart, looking for these long-term moves. Basically buy here, take profit here, expect it to come here after a week or so. Then swing trading, on the other hand, is basically um, short-term trading. Short-term trading where you trade on the 1 hour, 4 hour chart. What you're looking for, you're looking to trade this impulse move corrections, because we know the market moves in structure, impulse move correction. So you're looking to trade these small moves. Ne? You're looking to trade these small moves. That's when you're a scalper, you trade these small moves. Now, which one is the best? Well, it all depends on you as a trader and your account size. Ne? But the best one to grow an account is scalp trading, where you basically trade um, this small impulse moves and corrections. They increase your chances of being more active in the market, which means more profits if you know what you're doing, obviously. So growing an account, I'd suggest swing trading. I'd suggest scalp trading. Then um once your account is big enough, you can scalp, because you need one thing that is very important. It is to take your profits. Take your profits on a regular basis, frequently, in order to grow an account. So you can't grow an account if you wanna sell here and then wait for 2 weeks, you know. So another thing that you need to know is that take your profits, take whatever small profits the market is giving you. Okay, so going on the lower time frame, I saw that the market is going up. We're going up on the daily. So now I wanna capitalize on this. Now, obviously, according to the strategy, we put in our trend lines and adjust for most touches. Try to adjust for most touches. A trend line is useless if it does not touch most of the price action. So I immediately put in my trend lines. I will ignore the fact that we have a break here, small breaks here. Why? Because I'm trying to adjust for most touches. Very important to adjust for most touches. Yeah. Okay. Now, within the strategy, we believe that the market moves in structure. Impulse move, correction. Ne? Another impulse move. So within the strategy, we like to trade this second impulse move. The first impulse move happens while you're observing the market. Correction happens while you're observing the market. Only after you get this 1, 2, 3 touch confirmation. First touch here, second touch, third touch, third touch here. You wanna trade this third touch impulse move. So we have impulse move, correction, impulse move. You wanna trade the impulse move. Ne? Okay, please note this is very important now. This is very important. Please note this. Please note this. Okay. The impulse move is an impulse move to the upside. The correction is a correction moving correctively in the opposite direction of the impulse move. Opposite direction, then we get another impulse move. Okay. In this case, impulse move to the downside, correction going upwards in the opposite direction, impulse move. This is very important. If you get an impulse move, then correction in the same direction of the impulse move, chances are that this is a pattern, it's a trend reversal pattern of some sort. Then the next impulse move, instead of it being continuing in the overall direction, it will go in the opposite. Very important. So if an impulse moves to the downside, correction in the same direction of the impulse move, chances are the impulse move will be in the opposite direction. So these are the patterns that we utilize within the strategy. Ne? Okay, so it is very important to know these patterns, like very important. It's very important to know these strategies. You don't need to know their names. You don't need to know their names, but you do need to know how they look and how they work. Okay, so we have flags, impulse move, correction in the opposite direction, impulse move. That's a bull flag. Bear flag, same thing, different direction. Okay, now what I explained is this: the rising wedge. Impulse move, notice how the correction is in the same direction of the first leg of the impulse move. And then the reversal is an impulse move in the opposite direction. Okay, now going back to the live market. Going back to the live market. Ne? Shit. Okay, when you go back to the live market, you can immediately see that we have an impulse move, but the correction is in the same. Okay, let me just delete this. I like to keep my charts very simple, so I'll delete this for simplicity. Come on, come on, come on. Okay. Okay, coming back to the live market, we have an impulse move, correction in the same direction of the impulse move. Now, what does this tell us? This tells me that the next impulse move will not be in the direction, not will. The next impulse move might not be in the same direction of the first impulse move. Ne? Sorry for using will, because remember here we're trying to work with probability. There's a chance that there's a higher chance that the next impulse move is the first impulse move. The next one will be in the opposite direction, meaning there's a higher chance that this is a rising wedge pattern. You don't need to know that it's a rising wedge. You just need to know it looks like I said. So these are patterns that we utilize. Also, notice how price is kind of squeezing within this rising wedge. Not a perfect rising wedge, but price is kind of squeezing. So what tells me is that price will eventually break out to the bottom side. Ne? Now, how do I go about trading this? Right now, there's a 50-50% chance that the market will go up or down. Why do I say this? Because on the daily, we've established that the market is going bullish. The market is going up. It reversed from here, is going up to test this previous high. Ne? But now we are seeing selling opportunity. We are seeing a selling opportunity because we are seeing a rising wedge forming up. Impulse move, correction in the same direction in the form of a rising wedge. Now, what does this say? Okay, now I will look at other factors within the strategy to put the probability in my side. Okay, so within the strategy, there's a chapter called the 90% rule. 90% rule. Ne? Okay. So the author of our strategy, ne, after basically putting together many years of data to analyze the charts, he noticed something. He noticed that on the daily, okay, let me go back to the daily time frame. He noticed something. Okay, so there's a pattern within the strategy called an ascending channel. Let me put it into theory first. A descending channel. So we have a descending channel which looks like this. Ne? Price basically goes bearish in the form of this channel, ne? For the longest of time. Ne? After it breaks out, the more aggressive this downward channel is, the higher the chance of the breakout being very aggressive and impulsive. So after it breaks out, ne, it will correct in the form of a retest and then make a push to the upside, going to test this previous low here, the start of the descending channel. Now, the author of our strategy noticed that the market likes to do this. Remember, we are using patterns that repeat themselves over and over again. So he noticed that the market likes to move like this. Fuck. Sorry. He noticed that the market likes to move like this in the form of channels. And then after breaking out, the market only reaches 90% of this, of where it started, only comes back to 90%. So we notice that more than 50% of the time, the market only comes back to 90% of this area. Why? Because after people enter buys here, the market makers, they know that take profits will be here, right here at the top. So obviously, if they know that take profits will be here for almost everyone, they will try by all means to not reach these take profits. Come here only 90% and then reverse. Ne? So with that being said, we have some sort of an aggressive ascending channel here of some sort. Ne? Okay, I'll draw it for you guys. So we have some sort of a pattern. Ne? Okay, let me just go on we have some sort of a pattern here. Ne? It kind of looks like a not so perfect ascending channel to me. It may look like something else to someone, but doesn't matter. Okay. So we have this pattern here. You don't need to know its name. We have this pattern here. The market was moving within this pattern, and then it broke out, gave us a retest, and then make an aggressive push. Remember what I said? After breaking out, our author by using many years of data, he noticed that after breaking out, it will retest and then make an aggressive push to the upside. Look how aggressive this push is. This is very aggressive. You have bullish engulfing candles here. Now, notice how it does not necessarily reach here, this point. Well, it did not reach this point yet. I think it may not reach this point. Why? Because of the 90% rule. Okay. So now I'm putting, by this, I'm putting more stuff in my favor to conclude that we may be looking for sells on DXY. DXY may be going down. I think we've completed this move to the upside, ne, in the form of a rising wedge, respecting the 90% rule, and now the market may be making a push to the downside. Okay, so the market, the strategy is based on patterns that repeat themselves. Notice this. We have an impulse move, correction in the form of a pattern, impulse move. Ne? Within this second impulse move, we have an impulse move, correction in the form of a rising wedge, pattern, once again pattern. We may get an impulse move to the downside. So the patterns are very important. Please, guys, you need to know those patterns, and obviously I'll show you how to apply them, but you need to know them and you need to know how they work. Ne? So that's about it. I did not have to go to the lower time frame, to the hour, to determine what's going on. So on an hour time frame, because I know I'm looking for sells, two rules of thumb: buy low, sell high. Buy low, sell high. I cannot, the market right now is not at its lowest, but it's kind of low. I cannot look for sells here. This is where the patience comes in. I will be patient enough to let the market come here, give me a touch, make a push to the upside. From here, buy low, sell high. The market well is now at its highest. I will look for a sell. That's when I can enter my sells. Because once we establish on the bigger time frames that the market is going up or down, once we've established on the lower time frames, yes, you will see more opportunities, but rather only look for those opportunities that you saw on the bigger time frames to increase your chances of being right, and also to maximize your profit. Because now it means if I enter a sell here, if I enter a sell, there's a higher chance that the market will now break out of this. Now imagine if I enter a sell here at the top, market breaks out, and then it goes down with me. The profits are maximized. So it is very important to buy low and sell high, and to be patient. So now this sell, how will I look for this sell here? The market won't just come here. The market won't just, okay, let me make use of this pattern, the best pattern. The market won't just come here and then immediately I want to sell. It doesn't work like that. So after the market comes to this area of significance, after being patient for like a week or a day, once the market is in this area, I will look for a pattern. What kind of pattern will I look for? I will look for a trend reversal pattern. The market made a push to the upside. Now I'm looking for a push to the downside. So I'm looking for a trend reversal pattern. How many trend reversal patterns are there? We have 6 of them that normally appear on the lower time frames. On the bigger time frames, you may get your rising wedges and falling wedges. But on the lower time frames, on the 1 hour, 50 minutes, and 30, we get patterns such as the double top. Again, a pattern, you need to know it. Double top, then break. This being your neckline. So we have a peak here, and a peak here, giving us the name double tops. Ne? The market will break the neckline or support, test on it, and then make a push. So the market will go up from here. I will look for something like this. Then I will go down with it, a trend reversal pattern. Okay. What other trend reversal pattern do we have? We have the classic head and shoulder pattern. So when we push to the upside, a retest, further push to the upside, higher than the previous high, retest on the neckline, push to the upside. Okay, let me just quickly mute. Further push to the upside, giving us the right shoulder. And then finally, we get your reversal. This is your left shoulder. This is your head. This is your right shoulder. This is called the head and shoulder pattern. And then we get a more advanced pattern, which after knowing the double top, you should know. This pattern was developed by the author of our strategy. Basically, if you don't know this strategy, you don't know this pattern. We have an arc. Basically, you have your double top, but then double top in the form of a false breakout or manipulation or whatever. Break, retest, then further push. Notice how this top is lower than this top. Notice how this top is higher than this previous top. This is called an arc. This whole price is called a breakout, a false breakout. Others will say brokers manipulated, blah, blah, blah. Now, so this is the kind of trend reversal pattern I will look for in order to take this sell down here, up here, I mean. Yeah. So let me stop this recording and create a new one because apparently we have to finish. Yes. So guys, please rejoin the meeting. Please rejoin the meeting.